He's Jeff Hall, Senior Financial Advisor at Manulife Wealth. It's great to see you. Happy New Year.
Good to see you. Happy New Year.
Okay, your clients must ask you all the time, when are interest rates going to come down? And the answer to that could be, we could get a better feel for that in half an hour's time when we get these Canadian inflation numbers. What will you be watching for?
We want to see, again, the breakdown of exactly where the inflation is coming from, where the Bank of Canada has been successful in wrestling down that inflation in some of the areas that still persist. That's going to be key, because obviously it would be very nice this year when we get to a point where they're going to start to reduce interest rates. That'll take some pressure off, especially the consumer here in Canada that has line of credits or mortgages. That'll help out quite a bit. But it'd be very interesting to see this number coming up in about half hour's time.
And again, headline inflation expected to rise from November, although economists say that so-called base effects, in other words, the numbers from a year ago, will be material there. Global energy prices are expected to weigh on the monthly headline number. Monthly inflation is expected to have the pace to have fallen fallen by 0.3% in December from November. That's the value of the consumer price index, and that's because on a monthly basis, energy prices came down. Core goods likely resumed their decline, so that's within the core inflation basket. The price of goods expected to have been weighed down. Stuart Paul, who's an economist at Bloomberg, says he believes that interest-sensitive spending, which includes automobiles and furniture, they are included in core inflation. Spending there expects to soften as monetary policy, i.e. higher interest rates, takes root. Rents and mortgage expenses, meanwhile, remain the biggest contributors to inflation because of the effects on mortgage rates. What would you expect to see? Would you expect Canadians to slow down their spending on things like automobiles and furniture, big ticket items with higher interest rates?
You would hope, but I think more than anything, the higher interest rates are going to force people to keep that car a little longer and make some different choices. The big fear that I have that's a bit of a hand grenade in the economy is 3 years ago when interest rates were down at 1.5–2% for mortgages. People have an open mortgage or one coming due around 7.5 now. So hopefully the Bank of Canada will have the ability to actually lower rates. So as people have those mortgages come due and they have to renew, a little bit of that sting of the higher rate will come off, because that can cause a lot more problems for the average consumer here in Canada.
As for when the Bank of Canada acts, i.e. reduces rates, the overnight index swaps market, which is the corner of the fixed income market that forecasts things like this, is calling for a 100% probability of a 25 basis rate cut on April the 10th. Do you think that's premature? We often hear economists say, I think the market's getting ahead of itself.
Well, sometimes economists are there to make weathermen look good. So there's no question, I think the Bank of Canada this year will lower interest rates. Same for the United States, but they're not going to be in a big hurry. They did a lot of damage by getting to the party late and having to pump the brakes and raise those interest rates so rapidly, so fast, causing the shock. They don't want to start to kind of peel them down too quickly and end up back in the same problem again. So it'll be interesting to see. People can be hopeful that it'll be April, and hopefully it will be, but I'm not going to count my chickens before they hatch.
For stock market investors, the declines in U.S. interest rates are more influential. The market there is calling for a majority probability of a cut on March the 20th and an overwhelming majority probability on May the 1st, if not on March the 20th. Do you think March the 20th is premature for the U.S. Fed?
A little bit, but we are in an election year and there's a lot of moving parts as well. So we'll see what the Fed does, but it's going to be interesting to watch.